Hi there, Declan O'Toole, Select Real Estate. In this video today, myself and Patrick Queally talk about VA loans and VA loan myths and misconceptions. There's a misconception that they're a lower quality loan because of 100% financing, that they're harder to get appraisals, and also that it's hard to approve VA loans. All three of these myths are busted in this video. Please watch this video. It's a good education for you and for your agent if you're working with an agent. If you're a veteran, thank you very much for your service. If you're looking for a home, please feel free to reach out to me. I'll be happy to help you. Thanks very much. Enjoy the video.
All right, fantastic. So looks like we are broadcasting live. Welcome back to another edition of the Wicked Awesome Report. I'm your host and friend in the mortgage business, Patrick Queally from Hancock Mortgage, joined by my co-host, Declan O'Toole from Select Real Estate. Good morning, Declan.
Good morning, Patrick. How are you?
Things are well. Things are well. So again, thanks everybody for tuning in to the Wicked Awesome Report. Give us a thumbs up, a like, a comment, a share. Head over to the Facebook page for Wicked Awesome Report and do the same over there. You'll be notified next time we are able to broadcast live. So this morning we are going to be talking about a financing topic that I guess I've been fighting the good fight for quite a while here. It's the VA home loan. So thankfully, I have been fortunate enough to work with a number of veterans, have taken a lot of time and energy and effort to educate myself on the VA home loan, have a whole bunch of, certifications and list of letters and names and all of that that go along with the qualifications for understanding the VA home loan. And I would like to think that hopefully that puts me in the position of being the expert or one of the experts on that type of financing. And Declan, as a real estate agent, I know you've come across transactions where VA financing was part of the package to purchase or to sell a home. And hopefully you can give us some perspective from the real estate agent side as to, unfortunately, what some of the resistance is to using VA financing, and just in general, a lot of people view a VA loan as an inferior loan product. It's a weaker financial, position for that buyer. There's more risk involved because, appraisals take longer, appraisals don't come into value, the whole process takes longer. There's a whole slew of misconceptions that just bluntly, it's just factually incorrect. Okay. So why don't we spend a couple of minutes here on today's show, just going through some of those misconceptions, from the real estate agent side. Not going to beat you up, okay, but want you to talk about, maybe as a listing agent, when you take a look at that offer, what that means to the seller, or what a typical agent would say, that means to the seller and how they would present that offer. So let's start off with what is typically the largest roadblock or the largest hurdle when it comes to VA financing, that being that the veteran is typically entitled to 100% financing. So from a real estate agent side, you see an offer, it's 100% financing, not you personally, Declan, but the general real estate agent. What comes to mind when you see that?
All right. So as when offers come in on a property, you're looking at a number of things. The first thing you look at is you want to make sure, one, obviously you look at the price, you look at the terms, etc. But you want to make sure that when you've decided and you pick somebody, they can close on the transaction. So a cash close or 100% financing, at the end of the day, the seller gets the same number, right? So it really comes down to, can that person that's buying a property close? And when you look at offers, you do a quick rundown, you see what's the price, see how much they're putting down, then you look at the other contingencies that might be there. And when you see 100% financing, technically it's a red flag. In terms of, and I've worked with VA loans myself, I've done several of them, so I'm well aware of them, and I've really had no major problems with the VA loan. But from the perspective of an agent, you get your offers in, particularly in a multiple offer situation, you're going to get your offers in and you're going to have stacks, right? You're going to have the all cash, but lower offer stack most likely, the no inspection stack, And then you look at 100% financing, 20% financing, and then usually it's like there's a, they're getting 95.5% financing, and you basically look at those, and I do a summary for my sellers in terms of what the terms are,
and sort of a pros and cons of each one of those offers.
Correct. And the financing is always like one of the first things that you point out. Yep. So yes, at first, first glance, yes, 100% financing. The first thing you think is weak buyer. If you're a typical agent, that's certainly the first thing you think. Why do they need 100? Why do they need 100% financing?
Mm-hmm. Okay, so let's battle that myth right off the bat. Okay, so the veteran, because of their service to this country, they are entitled to 100% financing. They're not required to give a down payment. That's one of the, I don't want to say it's a perk. It's a benefit. It comes to them as a result of their service. Okay, so you take a look at the profile of what the veteran buyer is. Compare that to what their civilian counterpart is. Okay, so VA financing, yes, does allow for 100% financing, but when you compare the veteran buyer to the civilian buyer, the veteran buyer is actually much more well qualified. So on averages, the veteran has a higher credit score. The veteran has a higher income. The veteran has more money in the bank to use for a down payment, even though they're not required to give a down payment. They do have cash put aside for that. And they typically have a lower debt to income ratio. So the debt to income ratio obviously kind of goes in line with having the higher income. So they are, again, higher credit scores, more cash in the bank, lower debt to income ratios, and lower you have credit score, income, assets, as compared to their civilian counterpart. They're just stronger in each one of those categories. So you take a look at, two different offer sheets. You can't really see that behind the scenes, behind the offer letter. So what I do is when I have a veteran that is making an offer, or really for any client of mine, when they're making an offer, I reach out to the listing agent, make sure that agent knows that the pre-approval letter, the financing letter I provided to go with that offer, is legit. We have their tax returns, their bank statements, their pay stubs, review their credit report, everything needed to know that they're a well-qualified buyer. But we take a couple of steps extra for our veterans. So I have an additional piece of that cover letter that has a couple of bullet points that address what some of the common myths about VA financing is, and tries to use that letter as sort of a foot in the door to try to peel back any of the misconceptions and negative beliefs where it comes to VA financing. And typically the number one misconception is 100% financing. Well, that must mean it's a weak buyer. And nothing could be further from the truth. Again, based on the national averages, the statistics show us that the veteran buyer is actually much more qualified than their civilian counterpart.
Now, I've typically when I have 2 or 3 offers, or even have one offer that we're considering, I tend to reach out to the mortgage broker or the loan officer just to try and get a feel. Now, of course, sometimes it's like going back to the previous landlord of a tenant. Why you're going to get the, but it's a good way to sort of at least feel them out and see if you're going to, how strong the buyer is.
Yep.
Do you take? I think I kind of get inside knowledge on this, but I believe you take you're a little bit more proactive about that.
Well, exactly. Yeah. So a responsible agent like yourself, Declan, is going to make that call and sort of vet out that financing letter to make sure that it's legit. I don't wait for the agent to call me. As soon as I know that offer has been submitted, or even before it's submitted, I call the agent and say, hey, Mr. and Miss Agent, I'm Patrick. I'm a loan officer. I have a client, Mr. Mrs. XYZ, that's submitting an offer on your property. And here's the deal. It's VA financing. Yes, it's 100% financing, but they're well-qualified buyers. They have a credit score above 700. They do have money in the bank. They are, W-2 wage earning employees, gainfully employed. We have all their documents. Now, of course, There's a certain amount of client confidentiality. I can't get into, all of the details. And I do get the permission from my buyer to make that phone call, to reach out to the agent. And really what I'm doing is I'm trying to, go the extra mile here, go to bat, make my client's offer stand out as being different because it's followed up with a phone call from the loan officer. And hopefully by different, it then gets perceived as being better.
Patrick, that's fine and good, right? You've now just told me that you've got a good, strong buyer. That's wonderful. And you got a great buyer. They're a veteran. I thank them for their service. But I've got to sell a house, right? And there's two parts to this. Is the buyer qualified and is the property qualified? And I find appraisals, at least the reputation of VA loans, is that appraisals harder to get approved because there are more things that can go wrong. And
exactly. So here's the second most common myth that we'll try to put to rest today, okay, is that on a VA transaction, it's harder to get that appraisal to come into the value. And second of all, they just take too long for that appraisal to come in. So let's deal with the second one first, okay, the length of time that it takes for an appraisal to come in. Well, in every state, there are a number of appraisers that are VA certified. Okay, they have all the correct licensing to be able to perform appraisals for the VA, and they are duty bound to certain turn times. So, and it's different state by state. On average, it's typically about 10 days. So from the time they accept the assignment to inspect that property to the time they are required to turn in that appraisal report, 10 calendar days. That's not a long turn time. Even on conventional loans nowadays, we're seeing longer turn times than that. So it doesn't take any longer to get a VA appraisal in. So, the length of time, let's put that to the side because it's not real.
How about being harder? They're tougher.
Being harder. So condition requirements are a little bit more stringent than what they are on conventional loans. Absolutely. The basis for a VA appraisal is that the VA wants to make sure that veteran is getting safe, sanitary, secure housing. And in reality, whether they're a veteran or not, isn't that what every buyer wants? Okay. But when it comes to some really particular condition issues, particularly around here in the Northeast, we see two relatively common recurring items that show up. Number one is chipping and peeling paint. So if there's any chipping or peeling paint, interior or exterior, that needs to be addressed prior to closing. Okay. And that's not just on VA loans. That's pretty much, across the board on all government-backed loans. So FHA loans are the same. So chipping and peeling paint needs to be addressed. A common thing that shows up is if there's stairs. If there are 3 or more steps, it's at the field appraiser's discretion, but the rule of thumb is typically if there are 3 steps or more and there's no handrail that goes along with those steps, it can be viewed as a safety concern. So the appraiser very well may call for a repair item for a handrail to be installed if there's 3 steps or more. Okay.
So question, obviously that's helpful that most of the loan applications get are FHA loans. So if it meets similar requirements and the same
exactly the same is going to show up on an FHA loan.
Now, question: can they be addressed? So if the appraiser comes in, he sees the shipping paint, and the 5 steps up to the door, they need to be addressed. Can that be addressed during the process so that they can move forward?
Oh, absolutely. Absolutely. So if the appraiser identifies that as a condition issue or a safety issue, that issue needs to be rectified before he can get to the closing table. Now, here's a real cool thing with VA loans. And this actually happened on a transaction that I was involved in. The chipping and peeling paint situation. So the sellers were an elderly couple. They didn't have the ability to fix the issue themselves. Just physically, they weren't able to scrape and paint. It was actually the back deck to the home. Okay, they just weren't physically capable of doing that. They didn't really have the financial means to hire somebody to do it. So the veteran came in and did it themselves. perfectly acceptable.
Right.
Absolutely nothing wrong. Nothing was disguised or hidden. It was all above board, all clearly stated, an agreement between the veteran buyer and the seller that at no cost to them, he was going to come in, scrape and repaint the affected area. And the appraiser knew it. It was all documented in the file that the veteran was doing that work. Perfectly acceptable. Nothing wrong with that. Now, a conventional loan, you may end up with issues there because technically the seller should be hiring either doing it themselves or hiring someone to do that. Not necessarily the case on a VA, but if it's something that requires, a trade license to do. So let's say it was a plumbing issue or an electrical issue. So same situation applies. The situation needs to be rectified. It needs to be fixed. Okay. A licensed trade person in that situation has to fix it, but the veteran buyer, they can hire a plumber or electrician and pay out of their pocket for that tradesperson to go and rectify the issue. The seller doesn't necessarily need to pay for it. Now, in my opinion, in most cases, the seller should. It should be their responsibility. But if it's just a financial situation, the seller can't afford to do that, and otherwise the home is fine, and otherwise the veteran wants the home, well, it's certainly allowable for them to go and pay for that work to be done. And that's just an accommodation that exists in VA financing that doesn't really exist in other types.
Common sense basically gives them the option.
And that's what it is. So one of the other things when it comes to VA appraisals, besides condition, is value. So I hear quite often that a real estate agent is going to say that, well, we don't want to accept a VA offer because it's tougher for a VA appraisal to come into value. That is a load of crap. It's just not true. Okay. So whether you're a conventional appraiser, an FHA appraiser, a VA appraiser, you're pulling data from the same pool of information. Okay. There aren't special comparable sales that are just VA or just FHA or just conventional. It's the same pool of comparable sales that you're going to use in your report. You're using the same data, and it's the same methodology, same interpretation of that data to arrive at a conclusion of value. But with VA loans, you actually have a couple of opportunities to legitimately help the appraiser influence that appraiser's final opinion of value. On other loan types, that opportunity just doesn't exist. Once the appraiser puts a number on a page, that's it. Okay.
So I know a good agent should have comps available for the appraiser, and they have the option of using them or not. That's one. You're seeing after it's been appraised too, that you can come in and say, hold on a second.
Yeah. So here's how that works. So opportunity number one to influence that value is something called Tidewater. Okay. Now, kind of a funny name. And when Tidewater happens, and I'll explain what that means in a second, but when Tidewater happens, most people think, well, what the hell is Tidewater? I mean, we're not anywhere near we don't need flood insurance. We're not near the water. That's some sort of mistake. And they don't return the phone call or don't react to that. Okay. So here's what Tidewater is. If a field appraiser on a VA transaction is having difficulty reaching a conclusion of value that supports what that purchase price is, they're going to do something that's called invoking Tidewater. So what that means is they're putting everybody on notice. Hey, you've got this home under agreement for, $400,000. I'm having trouble reaching $400,000 as a conclusion of value. I'm really only getting to 375 or 380, or, whatever that number is. Invoking Tidewater means, hey, Mr. and Miss Real Estate Agent, other people involved in the transaction, please give me some additional data as to why I should end up at a conclusion of value of 400 that supports that purchase price. Okay. So appraisers are human, they may have made a mistake. They may have missed a recent comparable sale. They may not have, adjusted correctly for, the finished basement or the, whatever it is. So as a real estate agent at that point, you have 24 hours in which to respond. Yeah, it's a short timeline, but again, remember, the appraiser on a VA transaction is duty bound to a certain turn time, typically about 10 days. So if they're writing up that report and it's due in a short period of time, due in another day or two, well, yeah, they need a response to Tidewater pretty damn quickly in order to deliver that finished report according to their mandated turn time. Okay. So if a field appraiser invokes Tidewater, a couple of things will happen. Either the real estate agents involved knows what that means, and they'll respond with some additional comps, additional information to try and legitimately, and as part of the process, there's nothing underhanded or weird going on. This is how the VA process works. They'll provide some additional information to help influence that appraiser to arrive at a conclusion of value that matches the sales price. Now, if they provide that additional information, if they're not additional suitable comps, if it's really not good evidence or information to arrive at that conclusion of value, or if, like I said earlier, the real estate agents don't understand what Tidewater means and just don't respond at all, well, the field appraiser then finishes the report, provides it to the lender, and if the value is still short, so the conclusion of value is 380 instead of that $400,000 purchase price, we have an additional means to influence that value. Okay, so at the veteran's request, we can submit that file along with some additional supporting information to the regional lending center, the VA sort of operations center, and there are several throughout the country. And basically, it's basically a desk review of that appraisal. Okay, so within the VA office, there are licensed appraisers that are there that will take a look at the report that was completed in the field by that appraiser. We'll take a look at the additional information that we're supplying in order to try to influence that value, and they'll make a decision as to whether or not the additional information supports, yeah, it should be a 400 value, not 380, or maybe they'll increase the value from 380 to 390. So we're not quite getting to that 400. Okay. Now there are some percentage limits as to how much the VA office can increase that value by, but it's just an additional opportunity for us to help that veteran buyer and also help the seller come together on a transaction with a conclusion of value in that appraisal that supports what the purchase price is. On conventional loans, FHA loans, you just don't have that opportunity. So when a real estate agent tells me that VA loans just don't come into value and we don't want to accept, an offer because we're going to have trouble with the appraisal, politely and professionally, I'm going to tell them they're full of crap because it's not the truth.
So, Patrick, that's good. So you've answered the first two sort of, I suppose, issues we have, right? The buyer, is it a weak buyer? We've obviously concluded that it's not necessarily, most likely not a weaker buyer. Mm-hmm. The appraisal process, in fact, if anything, it seems like you're in a better position with the appraisal process. And Absolutely. Certainly I know from an agent's perspective, be prepared. It's always better to get as much information to the appraiser as possible, whether they want it or not. It's their option.
Yep.
But the other thing I sell a lot of condos, and I find that that's this VA approved condos, right? They have to be VA approved.
Correct. Yep.
Doesn't that make it harder to sell? What about it's a new condo?
Not necessarily. And again, it sort of boils down to the experience level of the loan officer you're working with. Okay. So when it comes to condos, on a conventional loan, there is an approval process that condo and condo complex goes through a review process. But on a conventional loan, once the financing is approved or the condo is approved, it's approved for that one specific transaction. There's not a master list of, okay, well, this condo complex is good for any type of conventional financing. That list doesn't exist. But that type of a list does exist on FHA loans as well as VA loans. So FHA loans have an approved condo list. And, I'm not here to knock or to badmouth FHA, but that process to get a condo complex on the FHA list, so getting a condo complex approved and added to the FHA approved list, is a time-consuming process. It is lengthy. It's not something that typically can be done quickly. On a VA loan, nothing could be further from the truth. It is quick and it can be easy. So speaking from recent experience, this year, 2020, I've had several veteran buyers that were purchasing a condo, and that condo was not on the VA list. So we had to gather, the typical condo documents, master deed, unit deed, bylaws, declarations, master insurance policy. One additional piece on VA is actually the minutes of the meeting from the last couple of homeowners association meetings. So that's one extra sort of little quirk that's needed on VA financing when you're trying to approve the condo. But basically, once we have that full package of all the condo docs, provide that to the VA, and on average, they're running about 2.5 to 3 weeks to approve that condo. So you take a look at the financing process as a whole, from the time the consumer signs the application package to the time you're sitting at the closing table, typically that's 30 to 45 days in the current environment. That's, pretty much where most transactions are falling. So if we get all those condo documents up front and submit that, well, we're not causing any delays trying to get the condo complex approved. We're running sort of parallel here. We're getting the consumer, the veteran buyer, approved for the financing. And at the same time, we have those condo documents in at the VA for them to approve the condo complex. So when it comes to, approving a condo for VA, myself and a number of my colleagues across the country really haven't had any complexes that were denied. It's a fairly simple process, but again, you just need to know what you're doing. You need to know what documents are needed up front so that you will end up with a smooth approval process. So to my memory, I can't recall any loan officer that I've interacted with on the VA side that has tried to get a complex VA approved and has failed. So it's
That's
not a
great.
rubber stamp of approval. You got to go through the process. But at the end of the day, as long as you're putting together the right paperwork, it should be approved.
I think from a conversation we had previously or earlier, is it something like over 2,000 complexes?
Yeah. So at last check, it was over 2,700 condo complexes in the state of Massachusetts were VA approved. And I know for a fact it's a little bit more than that now, because I personally have gotten a few more complexes approved this year. So I'd say, just as, if we want to round it up, call it almost 2,800 complexes in the state of Massachusetts are approved for VA financing.
So one other thing, it seems small, but it's out there, is, it can irk a seller every so often, is that they're required to contribute or pay the settlement credits, the closing costs of on a VA loan.
Yeah, and that's another misconception. So sometimes a seller is reluctant to accept an offer coming with VA financing because the misconception is, well, as the seller, I have to cover more of that veteran buyer's costs to get to the closing table. And it's pretty easy to figure out where that misconception came from, but it is a misconception. So just set the record straight. The seller does not have to pay anything additional when selling to a veteran buyer. The VA allows for that seller to cover more of than would be allowable on a conventional loan or an FHA loan. So it's possible for the seller to cover more of the costs, but under no means are they required to. Acceptable. The veteran buyer can, and in most cases does, pay for that termite inspection. So right off the bat, from day one, it's a misconception that the seller has to pay more, and it starts with that termite inspection. So the veteran buyer can pay for that termite inspection. The veteran buyer can also cover, all of their normal, regular settlement charges that exist in any real estate transaction. It's just that the VA allows the seller, if they want to contribute more, they can cover a higher percentage of what those veterans' transactional costs are. So it's a difference between required to and allowed to. So I think that's where the misconception comes in.
Is there any flexibility? So let's say for argument's sake, let's say it's a termite issue and they have to get a termite company, but let's say it's an older couple,
Mhm.
maybe they don't have a lot of money. There's a reason they're selling this house. Is the requirement on them to fix the problem, or how does that work?
Well, similar to the repairs issues we talked about before, so the issue needs to be addressed, but it is not mandated that the seller pay for whatever issue that needs to be addressed. So the veteran buyer can certainly cover the cost for the termite treatment. That's fine. Now, there are limits in terms of how much that veteran buyer can pay. Okay, so the VA does impose limits on how much out of pocket that veteran is going to be at the end of the transaction in terms of fees involved with getting to the closing table. So it's not a blank check that the veteran buyer is writing, but reasonable expenses. Yes, the veteran can contribute some or all of those expenses in order to get to the closing table. The seller isn't necessarily responsible for covering all of that. Now, my opinion is that if the seller is selling the house and there are, condition issues that exist with the home, I do feel that it should be the seller's responsibility to rectify that and deliver, safe, sanitary, secure housing to the veteran. But you're right, Declan. Sometimes the seller is just in a financial situation where they can't. They're selling the house out of, financial requirement rather than just desire to move on to something else.
Yeah, the other part of that is my understanding is most conventional loans, the bank isn't going to let the buyer take care of the issues before closing, right?
Exactly. They want to see that the issue was corrected, that it was done in a professional, workmanlike manner. So if it's a licensed trade, so if it's a plumbing or electrical issue, that the individual that did the work is licensed in that trade. Going to want to see what the cost is, copy of the invoice and proof of who paid it. Now, all that's still required on a VA loan. The difference is on a conventional, the seller has to stroke that check to pay for that work. On a VA loan, certainly acceptable for the veteran to pay for that if that's the agreement that's reached, between the parties.
Very good. So I think unless you can think of other issues, Patrick, I mean, they're the ones from a real estate agent. I'm sure there are other agents out there that may have other myths or ideas about VA loans.
Those are the big ones, the common ones that come up over and over again.
Right. No, I'm not surprised. So I suppose we've hit 30 minutes in terms of this conversation.
Okay, fantastic.
So I think, wrapping up, I think you're clearly a local expert. I consider you a veteran on VA loans. I would certainly recommend, I've certainly spoken to Patrick and gotten advice on VA loans. If you're a veteran or if you're actually an agent working with a veteran, I think there'd be no harm, even if you're not technically working with Patrick. I think it'd be great to have.
Yeah, absolutely. And I throw that out for our veteran community. Even if I'm not the loan officer of record on the transaction, you need some help and advice on how to get to the closing table with the least amount of hassle and, smoothly and quickly as possible. I'm here as a resource for the real estate agents and for our veteran community. Of course, I certainly love to be the loan officer of record and work with that veteran and get them to the closing table. But even if it's not me that is the loan officer in that transaction, if I can provide some advice and guidance on how to successfully get to the closing table, reach out to me. I'd love the opportunity to help.
Very good.
All right, so so we're right at just over 30 minutes now. So let's wrap it up for today's edition of the Wicked Awesome Report. Declan, thank you for joining me, and thank you for being a veteran-friendly real estate agent. I know the veteran community appreciates that, as do I. So let's wrap it up. Another edition here of the Wicked Awesome Report in the books. Patrick Queally, your friend in the mortgage business and host here at the Wicked Awesome Report, joined by Declan O'Toole of Selectre Real Estate, my co-host at the Wicked Awesome Report. Give us a comment, a thumbs up, a like. Head over to the Wicked Awesome Report Facebook page and do the same there. You'll be notified next time we broadcast live. So until then, hope everybody stays well and hope everybody stays awesome. Take care.